Hey, everybody. Colin Plume, CEO of Noble Gold Investments. Got Josh Ward, Vice President of Sales, Jake Bell, Senior Sales Associate, and it's happening. It is really, are we going to war? Are we not going to war? Did we stop a war? Did we stop a nuclear weapon? It's just every minute it's fluid, it's changing.
Well, and if you blink your eyes, it's over, right? I mean, that's it. It was about a weekend. I mean, it was
The 12-day war?
I'd say a 12-day war, right? If only all wars were 12 days.
Yeah. I mean, it hasn't been a 12-day war for Israel, but
No.
For the U.S. involvement, it's been much shorter. Jake, how you doing? It's been a while.
Pretty good. It's good to be back. Thank
Good
you.
to see you.
Yeah.
What are you thinking here? What's your thoughts on how's this going to affect the markets? Is this a distraction from our fiat dollar going to nothing? Like, is there, obviously there's war that's happened. I'm not saying that, but is this to get us forgetting about tariffs or what do you think's going to happen? What do you think's happening in the Middle East? What do you think's going to happen? What do you think the sort of the trigger effects of this conflict are?
Yeah. How in depth is this chess game that we're watching play out? That's a really good question. And of course, no one knows for sure.
Right.
The first thing that comes to mind is in Trump's first term when he wiped out Soleimani. Everyone thought that was World War III then.
Sure.
Iran responded, blew up an empty building, and everyone expected Trump's ego to come into play, and it didn't happen, and it was over by the weekend, right?
Yeah.
So that would be a best case scenario. Obviously, we don't want anyone having any more nuclear capability, especially Iran. So there's some good in that. I think we, as Americans, we can all, I don't know if we rest easy because we don't know what's going to happen in the next couple of days, but
Sure.
Big event. So there's a best case scenario and a worst case scenario. What's the best case scenario? Well, best case scenario is that this is just noise. It moves on. It becomes a distraction, does pull us away from issues around the dollar and our debt. There are several different storylines, several different narratives at play simultaneously, right? And I'm focused on gold. I'm focused on finances. And the biggest narrative is still around our debt. Our debt to GDP ratio, what's going on with the dollar and the devaluation. And everything's pointing to decentralized assets. So, which is, of course, why we're all here to talk about our beloved yellow metal along with its silver counterpart. So,
yeah. And I look at, when you look at military, it was one of the things I discussed in my book was that I was trying to get some hard data on how much silver is used for submarines and destroyers and all the silver heavy munitions that we need, and I couldn't get an exact number of how much they use. But if these conflicts continue to happen, we're going to see a driver of a military use. Drones, silver will be a big part. AI will be a big part of the conversation. And, I think the thing that's happened that's going to affect people that people don't realize, and I was talking to somebody about this, is that we hit peak silver, $900 an ounce. They pulled out of the ground in 2016. Peak silver means they think we'll never pull that much out of the ground again. We've been in the 800 ounce range of pulling silver out of the ground pretty much every year. This year we have 174 million shortage of silver. And you have to think about it from a business point of view that the mid 2012 to 2020, silver did not move, and silver became an asset that mining companies were not interested in. Because really, when you talk to miners after 9/11, when the price started to really take off, the price to pull silver out of the ground started to creep in the $19, $20 range. Well, if you look at after 2012, 14, 15, silver sitting in the $15, $16 range. There's no reason to mine silver.
no.
And
No,
so
absolutely not.
they just got out of the game. And so you had 5 years where silver miners were just unprofitable, not interested. And so you have this, this whole time when these silver miners get out of the game, they don't want to mine. And it's not easy to mine silver. And it takes a ton of time. It takes 10 to 15 years to set your sights on a silver mine and to actually pull silver out of the ground. So you look at what happened is for 2014, 15 to 2020, they just got out of the game. They just stopped mining silver. And so now with 2020, this price started to go up. And you look at the charts, price started to creep back up. So now they're getting interested again. So there's mines. They're all, all the talk is silver mines, which is great. I mean, but they're behind. It's going to take them a while to catch up.
Yeah,
So I think that, what'd you say, Jake?
Five consecutive years of deficit.
Yes, correct.
More silver being used than being sourced, and the title of your book is Aging Well So Far.
Yeah.
And especially in the last couple of months. And as far as how much is being used, well, we know Trump likes to spend, right? He did it in his first term. We had all this talk about shrinking our government with what Doge was doing, but we haven't seen it.
Yeah.
Our deficit this year is already up 14% from it was last year to date.
Mm-hmm.
And so what Trump loves to do is build the military. Great, fine. We need silver for all of it.
Right.
He used it. That was a pretty massive operation that was carried out a few days ago.
Correct.
So from a business perspective, I mean, what I tell clients all the time, it's a pretty simple math problem. We need silver. We don't have enough of it. It's becoming increasingly difficult to source for some of the reasons that you cited. And we need it. We need it. There's no avoiding that. In fact, that growth, that need, that demand is only going to exponentially grow from here on out for at least the next 10 years. And at that time, are we going to see silver hit $50, $75, $100 an ounce and beyond? Well, then we're going to see the miners dive back into it. Correct. And it's going to take them at least 15 years. I heard longer time frames.
Yeah.
But it takes a long time to find, dig, and produce the actual metal. It's not something that can just correct itself overnight. And here we see this surging demand for it, and there's no end in sight, right? Are we going to stop using computers? Is the EV market going to fall off? Are we no longer going to use solar? Is the military usage going to evaporate? No, of course not. All of that is increasing. And so everyone in this business, the three of us and everyone else we work with, we see this shift. We see this growing tide and this supply that isn't moving. It's not increasing with the demand. Yeah. There is a math problem. It does not add up. And of course, we've just started to see the price of silver move. And I don't think it's anywhere close to being done. I mean, do you guys think it's going to fizzle out at $35 an ounce?
No, and also Congress, authorized the Defense Department to they have unlimited funds for the defense from the U.S. Treasury through 2029. So they, in essence, have a blank check, right, to continue to buy and build more military, supplies in whatever facet that we need. So you already have this $148 million deficit before this happened, before all these things happened. I look at, what's happened so far this year. I mean, silver's outperformed Bitcoin and the S&P this year so far. And nobody is talking about this. I mean, literally, you don't hear any of that talk anywhere. I don't, on the news, if you watch it, they don't want to mention it. And I still think there's plenty of room. I still think you're looking at a 70-to-1 ratio, gold to silver, which puts silver today at like $46, $47 an ounce if gold doesn't move up $1. So that's the number that I think in the short term we're going to hit. I think we hit that. I think we have a chance to hit that before the end of the year in silver. And, I'll throw out my let's look at the U.S. military facilities. I know we have a chart on that here. So you look at the military bases here. You got, let's make that a little bit bigger. You got in other persistent U.S. military, 15 years in operation. Yeah, so I mean, we have a pretty significant presence over in the Middle East. I think that when we look at what's going to happen, the dynamics that are changing in the Middle East, I think it's important to know that we are pushing towards it seems like this administration is pushing towards Iran having a shift in government. I mean, that's by doing what they did, they laid the groundwork because Iran's last carrot was the potential for nuclear weapons. And so now that that's gone, most of their military operations are in desperate situation. I think we're going to see a change in government there. I think we're going to see a regime change. I hope we are not involved in that. I hope it just kind of evolves and the people there's an uprising. And we've seen these things before. We saw it in Iraq and we've seen it in other places that we've gone in. So I think that's what's going to happen.
Well, there's certainly no stability over there.
Correct.
Right? And I mean, it's a mess. It's a bloody mess. And I mean, the best we can hope for is just some sort of stability. And where does that come from? I mean,
Sure.
the Middle East has been a disaster for my entire life. This is
No
normal.
one, no one can remember a time of any type of stability or peace there. And I think that, the conversation that we should be having also is, does this conflict take away? Is this something that's really focused on what's happening right now? Or is this part of the bigger picture to let us forget that the tariffs are going to expire and not expire, but we're going to have tariffs start in about a week here. What that's going to send shockwaves through the markets. There's all these things happening, and the war is a conversation, but we do have tariffs happening. We do have our debt, $37 trillion in debt that, as you mentioned, is not going away. You have the big, beautiful bill that's going to add at least $2.4 trillion in debt over the next 10 years. So everything is building more and more debt. But I also think it leads to what I think is going to happen. And the markets are saying this. They're expecting 2 rate cuts this year. And I think aggressively there's going to be some kind of Fed change or movement to get rates down by the end of this year. But that will just send the dollar even weaker, and it'll put more money in the market, and it'll really send a message to the world that we're in a desperate situation.
I think that'll be a rocket ship for gold and silver, obviously.
100%.
Because these prices are still, I feel, fractional compared to where it's going.
Yeah.
But as far as all this, the debt, we need to finance all this, right? And there's basically 2 options. We either sell our debt, sell our U.S. treasuries, which from my research, I'm seeing that demand diminish across the board around the world, right? Who's going to want our debt when our dollar is going into the toilet, right? So what's option 2? Well, we got to grow our way out of this. Where's the growth? We're not hitting anywhere close to that 3% target mark. And I think we're going to need more than 3%. We're going to need to be 3.5, 4 for a sustained period of time, maybe as long as a decade, just to bring this debt, just to bring it down into something manageable, right? We're currently 124% debt to GDP. And by every metric, that's set to hit 140% by the end of this decade.
Right.
And that's part of the reason why countries do not have an appetite for U.S. treasuries.
Right.
What are they doing instead? Well, record amounts of gold and silver purchases by central banks.
And who wants to hold on and clip coupons for a 30-year treasury note at 4 to 5%, right? I mean, it's just burning your money.
Yeah.
I mean, it's you've seen platinum up 25% this year, right? Gold and silver are up significant this year, and it's hard to convince somebody to hold on to U.S. debt for 30 years at such a low interest rate.
Yeah.
I found a way of putting this in perspective, right? Because we talk about millions and billions and trillions of dollars. And for the longest time, I've just become desensitized to it completely. So I assume other people as well. And I found a really good way of putting this in perspective. Seconds. How about 1 million seconds? Colin, Josh, do you know how long 1 million seconds will last?
No.
11 days. 11 days and some change. What about 1 billion seconds? Well, that's over 31 years. When I heard that really kind of slapped it into perspective and how much of an issue our debt and our printing is causing for the stability of our economy and thus the world as well. And then if we go into a trillion seconds, well, that's more than 31,688 years. 11 days, 31 years, 31,000 plus years.
Wow. Yeah.
So I hope when we talk about these numbers, going from a million to a billion to a trillion is staggeringly significant.
Correct.
And we just get so dolled up and we just hear it all the time. It just means nothing.
Mhm.
Well, it means something very important. And again, everything is just causing more of the same. We have more debt. We have more need to print money. We have more need to borrow. We have more need to sell treasuries. None of this is adding up. I mean, if you go back to simple math, it is not adding up. And so I'll say it again, decentralized assets are the key. Obviously, gold and silver is one. I know you deal with crypto. That My Digital Money platform is an increasingly point of interest for myself. But I am extremely bullish on precious metals because how could there be anything but continued appreciation in this precious metal market? The dollar isn't going to strengthen. There's no end in that sight.
Yeah. And you know, I also think like what are the countries doing? You know, what's China doing? China has been building up their reserves for 25 years. They've been increasing their energy in every which way. They're focused on solar panels in their country. They're focused on renewables. They have 35% of the global supply of rare earth metals. 35%. They have gold mines. They have silver mines. I mean, they are continuing to de-lever their exposure to the Western market. They're selling U.S. treasuries. So I think, you know, you have this movement of countries buying gold. And I think the data isn't complete so far this year, but it looks like central banks will be close to 1,000 tons of gold this year again, which will be the fourth or fifth year in a row. I can't remember exactly, but you know, all of these countries are deleveraging from debt. They're moving away from debt and they're moving into hard assets. And so I think that's the interesting thing about what we're seeing right now is you see this, you know, you see the war, you see the tariffs, you see, and it's all this noise, but behind the scenes, countries like China just staying out of the war and just acquiring assets, tangible assets, to protect themselves, not getting involved in growing their military in any way, and just focusing on assets that help them grow their economy over the long term.
And as far as finances go, I think that is the biggest narrative.
Yeah.
That's the important one. And so this war, going back to that original question, or could be war, what's going on in the Middle East right now? Hopefully it's just noise, because I would hate to see anything else escalate. Obviously, it's kind of a reprieve to not have Russia in the news because, you know, they're the scary one if we really piss them off. But still, I think we're all human beings. We all want peace. We all want security. We all want to live with prosperity. And for people like, you know, my parents who did what they were supposed to do, they're the ones getting screwed over right now because their fixed income is dwindling.
Correct.
Right? When you're expecting to have a money market or a pension pay for your cost of living, and that was set, you know, 20, 30 years ago as you were moving your way through the company and building your retirement, then all of a sudden you just have this dollar implosion. And that's what's happening. I mean, every fiat system is basically destined to fail. And we are, of course, the largest economy the world's ever known. So our fiat system can maybe be stretched out more than others. Fair enough. But eventually enough's enough. I mean, you don't need a complex explanation. You can just use the Rocky Balboa explanation. You can't print, you can't borrow, you can't tax your way into prosperity.
Yeah.
We need responsible fiscal and monetary policies, and I don't see any on the horizon.
Yeah. we're going to cut to something real quick, but I wanted something did come out recently about Social Security that was to further your point, and then I want to get into Trump versus Jerome Powell, maybe WWF style match. We'll get them in the ring together. But let's cut to something real quick, and then we'll come back.
We're talking to people today about investments. Let's see if we can get somebody. Excuse me, sir. Do you have a retirement account?
I do. I'm invested in some annuities.
Fixed income? How is that?
It was better a few years ago. Each year, it buys less and less, barely keeping up.
That's where gold can make a difference. Unlike fixed payouts, gold rises with inflation, so you're not stuck with a low fixed payment.
So gold isn't stuck in the past like my annuity?
Don't let inflation erode your retirement savings. Invest in gold. Invest with Noble Gold Investments. We're talking.
Yeah, I in regards to what you're saying, 100% right. I think that the thing that, and there's an article we're going to pull up here that just came out. Yeah, there we go, 6 days ago. Social Security retirement trust fund may be depleted in less than a decade. Every time I turn around, there's an article about Social Security. And, this is a pretty scary thing. Trust fund social help retirement benefits may be depleted by 2033, at which point 77% of those benefits would be payable. So, when you look at this, every time they do a new calculation, they're seeing the program not funded enough. And so there's only a few things that can happen. Either they're going to increase the age that you can get Social Security, which they've done. They recently just did that. They may be forced to potentially lower the amount, which would be catastrophic, in my opinion, to most people, because most people that are living on Social Security, it could be a pretty significant amount of their income in retirement. And also the bait and switch of the whole thing is that we paid into it.
That's exactly right.
Right. When we met with Charlie Kirk, they were talking about how President Trump, and I think he came out with it, is that they want to have a bill to put $1,000 into like an IRA type account for children at birth. And then at 18, they would have access to the money, but other people would be able to put money in. That's a more realistic project than Social Security is at this point, because if they're going to continue to cut benefits or reduce the amount that you get or increase the age, it just makes it more and more difficult to plan, which is a big reason a lot of people will contact us. It's just because they're frustrated with not knowing if Social Security is going to be there. It's going to have enough money for them when they're going to retire. And then, there's just the thought that eventually, like, maybe the math is totally wrong and maybe it's funded even less. I mean, how do we trust the government to say that they're going to have enough money there for us?
Well, there you go.
It's a pretty scary situation.
And one of the things that we're doing for every one of our clients is we're promoting their independence.
Mm-hmm.
Right? That's what precious metals does. Precious metals are a standalone asset. There's no central bank, there's no government that issues gold and silver, right? It puts you above any one economic system.
Right.
And that's the financial sovereignty, that is the state of independence that precious metals offers. And of course, we're a nation. We have a Declaration of Independence, and we have increasingly, every year that goes by, we become more in a state of dependence. And if you're sick of that, and you're sick about worrying about whether Social Security is going to be there or not, and you want some stability, Josh, you want to give us our phone number?
Yeah, absolutely. You can give us a call here at Noble Gold, talk to myself, talk to Jake. We have a lot of great representatives to kind of go over your options here. 877-646-5347.
Yeah, talk to a real person, not a bot. And then I just, before we end, I just want to say, and I think this is going to be the running narrative through February of next year, is Donald Trump versus Powell. You look at some of these, too late Jerome Powell. You look at some of the tweets and some of the conversations. I think President Trump's going to find a way to get rates down. He's going to work his magic in some kind of way. But if you look at true inflation, it's below 2%. he's going to try to find a way to get this guy either out of office or get our rates down. If you look at this too late Jerome Powell quote, that, you know, Europe's had significant amount of rate cuts, and this is what stimulates. We need a little bit of a correction here, and I know we're addicted to cheap money now, and unfortunately this is just the way it is. But at the end of the day, we need to be able to get some money available for businesses, for, you know, regular people. People just can't afford to take on this kind of high debt anymore, and it's really hurting our economy. It's hurting the real estate market. You know, I think we talked about it last time. There's more single family homes on the market today than ever in the history, and so we have people that want to desperately get out of these homes. They want to move on. They want to move. They want to downsize, whatever they want to do. And because rates are so high, buyers are just not willing to get in the market. And also the banks are just not willing to lend where things are. So something's got to shift a little bit. So, you know, I would say the 50 basis points they're expecting this year, I think that's going to be a minimum. I think it could be even more aggressive. But this Trump-Powell feud is going to continue through this year. So there's going to be turbulence. This is going to be already. It's been quite a volatile year, but you got tariffs coming. You got gold becoming a tier 1 asset July 1st for the banks. I mean, there's just so much happening in the precious metals market. So as you guys said, if you guys want to talk to really guys that know gold and silver, Josh, Jake, these guys have sold hundreds of millions of dollars of gold and silver. They've also saved people a lot of money. We focus on bullion, coins, and bars. We've saved people from going to some of our competitors that charge 40, 50, 60% commissions. And I know that sounds crazy, but it's happening. You know, I think if you calculate all the money we've saved and sold, it's probably in the billions that we've saved people, because we've sold over $2 billion in gold and silver in the last 8 years. And we've been able to save people from, you know, buying the wrong product or the wrong asset. So anybody out there looking for a good firm, family business, talking to real people, please give us a call. We'd love to walk you through it. We have gold guides, we have silver guides, platinum guides, tons of information, or you can just ask these guys as many questions as you want and really build a relationship. That's what we've done with our clients. So thank everyone that's been on, listening, watching. If anyone has a topic you want us to go over next week, send it in. We're happy to go over and dissect things, but a lot's happening in the market, and you know, let's hope that the war is over and we go to our peaceful situation. But the Middle East is, you know, very volatile, so anything can happen. So Jake, Josh, thank you.